Hello, Sam. So this is a video I said I'm going to make about the MetaTrader 4 app and how to use it and place some trades on it. So when you open your MetaTrader 4 app, you notice there's some letters that's under quotes. On the left side, you have some letters which are the currency pairs, and then on the right you have some numbers changing. That's changing from red to blue. So I earlier when I was talking to you, I said that forex is just about exchanging one currency with another currency, using one currency to buy another currency. So um let me start with the first one. We have AUD. So usually these currencies are actually, they have abbreviations or short form, so that it will easily contain the page itself. So we have AUD, which is the Australian US dollar Swiss franc. Now let me explain something very important. Now you know that video, all those some of those videos I sent to you, on one of them they said, like, on if you watch the video, you must have seen a part where they said that the pairs, there's what they call the base pair and the quote pair. So looking at this AUD CHF, AUD is actually the base pair, while CHF is actually the quote pair. So what it means is that on the left, on the right hand side, which is this place, you have your numbers that are changing. On that, in the right side, for ADCHF, where we have 0.68814 and then 0.6884. So that means that for AUDCHF, one AUD costs 0.6880 Swiss franc. That means for me to purchase one Australian US dollar, I'll need to pay 0.6880 in Swiss franc to purchase one US dollar. Then let's go to the next one, AUDJPY. That's the Australian US dollar Japanese yen. And then if you go to your if you go to the right side, you notice the value there is 75.75 to 75 points. So that means that for me to purchase one Australian US dollar, I'll need to pay 75. I'll need to exchange it. So the exchange rate for Australian US dollar GPY is 75.75. That means for me to purchase one Australian US dollar, I'm going to pay 75.75 in Japanese yen. Then the third one we have is AUD that's the Australian US dollar New Zealand dollar. So for me to purchase one Australian dollar, I'll need to pay 1.04 New Zealand dollar. And then next we have AUD USD, which is the Australian US dollar against the US dollar. So that means for me to purchase one Australian dollar, I'll need to pay 0.699 in USD. Now let me go to Euro USD. Let me explain something. Now if you look at Euro USD here, now you notice that on the right side we have the value, the exchange rate for euro against US dollar is at 1.1328. So what this means is that for me to purchase 1 euro, I'll need to pay USD. I'll need to pay 1.13 US dollar. Now let me explain this more. Let me go to my browser now. Now if I go to my browser, if I type Euro USD, notice something. Euro USD. I want to get the exchange rate for this particular pair. Like I want to like explain it so that you understand. Sorry, let me make it USD exchange. So you can see I typed Euro USD exchange rate, and you can see it's telling me that for me to 1 euro is equals to 1.13 United States dollar. That means if I'm actually going to purchase 1 euro, I will need to pay 1.13 United States dollar. Likewise, let me give another example. US dollar Nigerian naira rate. So you can see what they brought out now. So for me to purchase one United States dollar, I'll need to pay 360 Nigerian naira. So this is just explanation of those numbers you are seeing. So this is just an explanation of those numbers you are seeing, so that it will be very very easy for you to understand. Now look at this part now. USD NGN. So that's the exchange rate for the US dollar Nigerian naira. The US dollar Nigerian naira. So that's it. USD NGN. You can see it. USD NGN, and look at the rates on the right hand side, 360.533. I mean this particular place that my cursor is moving. That's what I'm talking of now. USD NGN. Notice on the right hand side I have 360.52. So that's the rate. So for me to purchase $1, I'll need to pay 360 naira. So that's just the simple explanation of what the base pay and the quote pair is. So just know that the first currency is the base pair, and the second currency is quote pair, and then the digit you are seeing on the right hand side means that it is you need that amount of money on the quote pair to purchase the base pair. Like AED you can see the value 0.6882. So that means for me to purchase $1 I'll need to pay 0.68. So let me show you the example of what I mean. AUD. So let me just type it. AUD. So you can see the what it brought out for me. $1 is 0.69 Swiss franc. So for me to purchase $1, I'll need to pay 0.69 in Swiss franc. So it doesn't mean that whenever you're trading you need to start typing this single. I'm just trying to use this Google illustration to explain to you, to break it down to you. So it doesn't mean that anytime you're trading you have to go to Google to go and type it. So I'm just using this one to like explain what I mean by the numbers you are seeing there. Now let's go to the next part now. Directly under this pair AUDCHF, you notice where the road spread. And then on top of it, that's the time, the time at the market, and the current market time. So like currently in the global market now, the market is 2 hours ahead of us. Here currently we are is at 9:53 here in Nigeria, but there is 11:53. So that means that the general market is like 2 hours ahead of Nigerian time. So, but more importantly, I want to explain that spread. Is the spread that is more important. So now spread is actually the difference between the bid and ask price. So the bid means the price that buyers are willing to buy, which is the first part, which is 0.681 you are seeing 5, and then the ask price is the price that sellers are willing to sell. So the difference between the sell and the buy is your spread. You understand? If I decide to subtract 0.6884 from 0.6881 to give me my spread, you understand? So spread is just the difference between your ask, your bid, and your ask price. That's the difference between the price that sellers are willing to sell to the buyers. Yes, but things that don't really confuse. There's nothing to confuse yourself. I'm just explaining so that you know what it means, sha. Then if you look at the right hand side, you see where the road's low and high. So low is just the lowest point the candle opened for that particular time, and then your high is the highest point your candle opened for that particular time. So if you are scrolling down, you'll be seeing different pairs. Like here we have our New Zealand Japanese yen, 72.58. So that means that for me to purchase one New Zealand dollar, I'll need to pay 72.59 yen, Japanese yen. Then let me give another example. USD So that means that you can see on the right hand side the value there is 108.256. So that means that for me to purchase $1, I'll need to pay 108.26 Japanese yen. And the spread, you can see the spread there is just changing. So it's just different between the price that sellers are willing to sell to buyers, or buyers are willing to buy from sellers. So now, but the thing is that normally, me personally, I can't trade all these pairs. You understand? It's very difficult to trade all these pairs. So it's advisable that someone just pick a few pairs that he or she feel is good for him and just focus on it. So normally, if I'm to just open my MetaTrader, I'll need to delete some of these pairs because I can't trade everything. So I would click on this pen icon, this pencil icon at the top right here. So I'll click on it to edit. Then I'll click on the delete button. Then I'll tick. I'll choose the top that this place where there's a double tick, so that to choose audio to select audio pair. Then I'll delete. So when I'm done with that, I'll notice that I'm left with one pair, the Australian dollar Swiss franc. Now I don't really trade this pair, but I'll need to add pairs that I trade. So the thing is, I'll need you to also trade the pair I trade. Now I don't trade this pair, but things I'll need to add pairs that I trade so that you also add it there. So I'll need to add. I'll click on the plus sign at the top right. This plus icon. I'll click on it. Then I'll see different pairs at forex indices, spot oil, shares UK, futures, shares, crypto, commodities. So these are different markets you can actually trade. So these are different markets you can actually trade. I know I told you that this is where a broker comes in. Normally, for me to actually say I want to trade oil, for me to trade a barrel of oil, I'll need to be a billionaire. I'll need to have lots of money, you understand? But it is that with this broker can give me access to also take part in the market, to also take part in buying and selling oil. You can see gold and silver, you can see energy, you can see bond. So if I open oil, you can see Brent crude oil, US oil, then bonds. So this one I don't really trade this one, sure. I'm just trying to explain different stuff. So you can see you can trade cocoa, you can trade coffee, copper, cotton, palladium, platinum. You can trade sugar, shares UK. So these are different shares of company in the UK. Vodafone, Royal Bank of Scotland, Barclays, British Airways. So you can actually trade different pairs like this. See futures, Euro stock, France index, Germany index, Nikkei 225, Netherlands, Switzerland. So let me just go straight to the pairs I want to add. So I'll go to forex. So I'll choose the first one. I'll choose is the common one, Euro US dollar. I'll click on Euro US dollar. The next one I want to add is the Great British Pounds US dollar. The next I'm going to add is the US dollar, Australian dollar versus the US dollar. Then I'll add US dollar Japanese yen. So those are the pairs I would want to recommend any new person that is trading. Me personally, I don't trade. So these are the pairs I trade mostly. I don't trade any other pairs because most times these pairs are actually very difficult because of different. I don't even trade in the Nigerian naira, US dollar, because it's kind of stable. It's a stable. Is in between 360 to 355. So I don't really trade the sharp. So there are different pairs you can actually trade, but these are just the ones I just trade on my own. So I'll click on the back button. So then I also trade gold and silver. So but it's not every time I trade the sharp, but I'll just add it gold spot. Then I'll go back. I'll go to silver. I'll add silver spot. Now when I go back, so these are the pairs I'll see on my main page. AUDCHF meaning Australian dollar Swiss franc, Euro USD meaning Euro versus the US dollar, Great British Pounds US dollar, Australian dollar US dollar Japanese yen, gold spot and silver spot. Now let me take it back to that base and quote pair. So Australian dollar Swiss franc. So that means I'm actually trading Australian dollar against the Swiss franc. So I'll go back to the main quote. So you can see that my currency pairs have reduced. And it's really advisable to go for pairs that their spread is different, so that you can actually make profit. Because once the spread is too much, you need the market to really move more before you can make something substantial. So you've noticed all these pairs I went for, most of them are below 30. like this Australian US dollar Swiss franc, I told you I don't trade it, so I will need to delete it. But it is I can't delete it currently because my chart is on the chart is already open on that particular page. So I'll need to open on that chart, which is the Australian dollar, sorry, the euro US dollar. Then I'll go back, then I'll click on edit. You can see I can delete it now. So notice these are just the 5 pairs I have: euro US dollar, British pounds, AUD, US dollar JPY, then gold and silver. So the pairs I just trade now are currently 16 numbers. Now let me go to the chart now. Let me explain the chart. So when you tap on any of the pair, you see new order, you see open chart, you see symbol properties, you go to advanced view mode. So let me open chart. And now let me explain something. Now if you look at this chart I opened now, you notice that there's a blue line. You notice that there's a blue line and there's a red line. So I noticed it is moving, it's always moving up, down, up, it's always changing. So far the market is open, it's always changing. Now you notice that there are two colors. You have your white color and your black color. So the white color is when the market is going up, while the black color is when the market is going down. You understand? And now let me explain what this blue and red line means. Now this blue line is actually the price, the bid price. That is the price buyers are buying. That is the general price buyers are buying, while the red line actually a price that sellers are selling. You understand? Now let me explain this candlestick. Now remember when I was talking to you, I said that there are different time frames. Now on this chart I opened, you can see at the top left, you can see where they wrote EUR USD M30. So that's the Euro USD 30 minutes. M30 means 30 minutes. For me to choose different time frames, I'll just tap anywhere on the screen. You see a round circle come out anywhere on the screen. Once I tap it to come out. So you can see M1, which means 1 minute, M5, which means 5 minutes, M15, which means 15 minutes, M30 30 minutes, H1 1 hour, H4 4 hours, D1 1 day, W1 1 week, MN 1 month. Now I can use it to change different time frames. So let me start from the 1 minute time frame. If I click on M1, you notice that my chart will change. You notice that my chart will change. So what this thing represents is per 1 minute. So each candle represents 1 minute. So let me show you something now. Notice the current time at the top right. My time on my phone now is at 10:04. So let's watch what will happen at 10:05. Notice that at 10:05 a new candle is going to form. A new candle is going to form at 10:05. So each candle represents a time frame, the time frame you choose. So let's wait for it to get to 10:05. Look at the top left of my phone. You see 10:04. That's the current time. So let's wait for it to get to 10:04 for a new candle to form, so that you really get what this candle is about. So when your candle is black, though you can choose your color shower. Notice something now, that at 10:05 we had a new candle has formed. Notice that a new candle has formed at 10:05. So let's still wait for 10:06 to see what will happen. Let's see how these candles form. So I'm using, it doesn't mean that you're going to use this 1 minute to trade. I'm just trying to explain to you what each of these candlestick represents in terms of time frame. So the time is at 10:05 now. So let's wait for it to get to 10:06. Let's see how a new candle will form. So there are different time frames. You have your 1 minute, you have your 5 minutes, you have your 15 minutes. So for 15 minutes time frame, it means that at every 15 minutes a new candle form. For the 5 minutes, it means that at every 5 minutes a new candle form. At 1 minute, it means that at every 1 minute a new candle form. For a 1 hour, it means that at every 1 hour a new candle form. Your 4 hours, at every 4 hours a new candle form. At 1 day, at every 1 day. Notice now, we had a new candle just formed now as it turned to 106. So that's just how this candles form. Now let me go back to this 30 minutes, because I use 30 minutes for my trading. I use 30 minutes, 1 hour and 4 hours for my trading. Now, for me to place a trade, for okay, going back to this 30 minutes now, for a new candle to form, a new candle is going to form at 10:30 because I'm using the 30 minutes time frame. If I choose 1 hour H1, it means that for a new candle to form on the 1 hour, I'll need to wait for it to get to 11 o'clock. Then if I'm choosing 4 hours, so you understand? Yeah, so that's just about these candlesticks. Now let me explain a candle. Let me explain what a candle means. Let me explain how these candles form. Now, let me show you something. Now, if you look at this, the last current candle. If you look at the last current candle we have here, this one I just put in between this rectangle I just drew here. Let me show you something. So if you look at the last candle here, let me take it to 15 minutes so that I can draw the rectangle on one single candle. And my network is a bit bad, so it's taking time to load. Yeah, so okay, let me take it to back to 30 minutes. So I'm trying to explain what one of these candles represents, the information that the candle is giving us. So now, looking at this, the last candle, looking at the last candle there, this candle, from the highest point of that candle, from the highest point of that candle to the lowest point of the candle. Let me make it black so that you can notice the difference. Don't worry about all this stuff I'm bringing out. I'll explain how to set them. So they are called drawing tools. So it's what you use to plot your graph, plot lines, draw circles. Yes, now I want to explain something now. So for this chart now, when it's white, it means the market is going up. When it's black, it means it's dropping. So now, if you notice the line I drew at the lowest point of that particular candle, of this current candle here, the low point and this high point. Now, let me explain what it means. And you notice that if you look at this current candle, you notice that unlike others, others are full. Others are really full, but this one is thin. Now, what this means is that at 12 o'clock, if you look under here, you see my time. Time is at the the left, while your price is at the right. So at the bottom left is your price, your time, and at the left hand side of your chart is your price. So it's just actually time against price. You are trading time against price. So that's what it means. Now, let me explain this particular candle now. If you look at the lowest point, we have 1.13278, and the highest point here is 1.13334. So what this means is that at this particular time, as at 12 o'clock on the 1st of July 2019, as at 12 o'clock, 12:00, the time here, this candle dropped. This 30 minutes candle started at 1.132. You understand? It went up to this point. It went up. The candle opened. So this low line is called the open point. Just like here, this one here means that this candle opened here at 11 o'clock at 1.132. This one here, this for a candle that is going up. Here, this one means that this candle opened here. This one, the candle started here. The 30 minutes candle. So after this 30 minutes here, after it's open, after it's 30 minutes, then the next candle started here. The next one started here. Next one started here. You understand? Now you can see the way things changing. You can see the way this current one is changing. Now what this means is that the candle opened at 12 o'clock at 1.132. It went as high as 1.133. It dropped down to where it is currently. Notice that it's going up. It has gone back down. Look at it, it's reducing now. Now let me explain how these colors change. Let me explain how these colors change. Now, let me show you something. Let me put an arrow. Now, if you look at, let me remove this drawing too. Now, if you look at the second to the last candle, this particular one, if you look at this second to the last candle here, this second to the last candle, now notice that look at the second to the last candle. Notice that the candle closed. It closed at this point. It closed at this particular point here. This was where the candle ended on that for that 30 minutes. Let me change the color so that it will not confuse you. Let me make it pink. Wait, no, let me make it brown. And then let me put another one under. Now you notice that as I was making this video on that particular last candle, it was white. Now it's turning to black. Now, if you look at the second to last candle where I drew this arrow, you find out that this candle closed. The two brown line represents where the candle closed, but that particular 30 minutes. You know, it opened at this point. It opened at this thin line under this thin wick. It's called a wick. So it opened at this wick, and then it went up as high as this place before it dropped and closed here. You understand? Now, the reason why this candle has turned black is that the last candle, the current candle that is forming, went up, but it has gone below it. It has gone below it. Then note that the price is dropping. So far the current price here. Let me remove all this stuff so that you understand. Now, notice that the current price is at 1.13280. Notice that is lower than the second to last candle. That's why it's dropping. So that's how this candle is formed. So at every point where the candle goes below the previous candle, it begins to turn. Price begins to drop. But when the next candle begins to move up, notice that it has turned brown. It has done black. Now show me that price has dropped. So, but since I will show you. I will need to send you videos on these candles, because you may not really get all these stuff. Unless I'm teaching one-on-one, you don't really get it. So I'll send you videos explaining what these candles mean and how to use them. Now, let me go to how to place your trades. Now, I'll go back to the quotes where I have my currencies. Now, for me to place a trade, I'll click on any of the pair. If I click on any of the pair, you notice I will see new order, open chart, symbol properties, advanced view. Now, after you need to check your chart before you place any trade. So after I open my chart, next thing I have to do is to go back, and then I'll open my new order. Now, when you open when you click on your new order, you see the description of that particular pair, euro versus the US dollar. You now see market execution. You see some numbers. You see some numbers, 0.01 plus 0.01 plus 0.1, and then under it you see the value of the currency. That's the exchange rate. You can see it's changing. 1.1327 is changing. It's changing from red to blue. Then under it you have your minus. Then you have your minus and your plus sign. You have your minus sign, you have your plus sign. Then you have your minus sign, your plus sign. Then you can see some graph. You can see this graph that is just moving up and down. So this is just it's just like a microscope. So it's just showing us. It's just zooming in what is actually happening on your main chart. It's just like a microscope, but we don't really need it sharp. Then when you now go down, you see where they wrote sell by market, buy by market. So that's just where you just click after you input your lot size. So you just click sell or buy to place your trade. Now let me explain something. Now let's go back to market execution. So let me explain what it means. Now this market execution means that when you open your chart and you feel that you want to take your trade at that particular point in time, you can just place your trade at the current market price. You understand? Just like you going to the market and you ask the seller, how much are you selling a loaf of bread? That's a bread. That's bread. How much are you selling bread? The person will tell you maybe 200 naira. So you can decide to say, okay, let me buy it at 200 naira, that particular price the person is telling me to buy. But if I feel maybe it's too expensive, oh, let me negotiate. Let me price it down. You understand? So that's when you can decide to buy it lower than what the person tells you or higher than what the person tells you. So going back to market execution, market execution is just you placing your trade at the current market price, and I use it most of my trades and my market execution. Once I see that my chart is ready for me to take a trade after my analysis, I can use market execution. Now let me click on market execution. You notice there are different options. You have your buy limit, you have your market execution, buy limit, sell limit, buy stop, sell stop. So the thing is, I don't want to confuse you, so I'll send you a video on explaining what this buy limit and sell limit means. So I'll send a video on it. So now let's go to our lot size. Now I told you about lot size. That lot size represents the amount of money you're willing to stake for that particular trade to make profit. I know there are three different there are three different lots. You have your standard lot, you have your macro lot, and you have your micro lot. You need to watch those videos I sent to you. So your standard lot is one. Standard lot is one, and if you're actually staking one lot, it means you are risking $10 per trade per that particular position per pip movement. You understand? So like now, let me give an explanation based on what I'm just talking about now. Remember I talked about pip. So pip is actually difference of 1 unit in forex. So now let's look at what is happening now at Euro USD. We have 1.13247. That's on the left. Then on the right you have you have a 1.1325. So now pip, the difference between these two now, you can see that number, that is, you can see the second to the last number, that's the last digit, that's on 1.1324. Notice that the last digit there is 4, and then raised to power 3. You understand? So now that raised to power is called a micro pip, while the 4 itself is called a pip. So now the difference between these two is 1 pip. Can you see it? The difference between 2.4 and 2.5 is 1 pip. Can you see it? You can see it, but it's just the micro pip that is changing. Now, then that means if I actually want to take this trade, you can see now it has gone back to 1. It has gone back to 1 pip. It increased by 2 pip. It has gone back to 1 pip. Now the thing is, if I want to take this trade, and I'm using one standard lot, I'll just need to click on, let me increase it to one standard lot. So for me to increase it to one standard lot, I'll click on this plus 0.1 to increase it to one standard lot. Let me reduce it. So this is one standard lot. 1.00 is one standard lot. So it means that if I'm actually selling now, it means I'm actually risking $10. But let me give a live example. Let's assume I have analyzed market and I want to place a sell on this particular trade. Well, let me go back to my chart and look at it. This is a demo account. Okay, let me place a sell. Let me see if I'll place a sell on this trade. So I'll click on new order. Now let me explain standard lot and macro lot size and mini lot size. Now the usual default here is 0.01 whenever you open your new order, though it can change depending on the last order you placed. So now let me increase it to one lot. So I'll click on plus 0.1 to increase it till it gets to one lot, and I'll click on minus 0 to make it one lot. Now I'll click on sell. I want to sell, I'll click on just sell. I'll click on sell here. You can see my order has been opened. Now you can see that immediately I opened it, I saw minus 20. You understand?
So remember I told you that one lot size means that you're actually risking $10 per pip movement. Now let me explain something. Look at the top right. Look at the top left. You see where they wrote 1.13240, then a arrow, then 1.13267. So now it means that currently I'm on a sell, but I'm at a loss of 20 something pips, 26 pips, 26 pips. Sorry, 2.6 pips. Sorry, 2.6 pips. So for me to get the difference, I'll just subtract. I'll just say 1.132. Let me open my okay. Let me um let me open my calculator so I would explain what I mean. So if you look at this particular trade I entered now, at the left hand side, I have a 1.13240, then an arrow 1.13272. Now let me explain how they got this negative sign. Currently I'm on a loss now. Currently I'm on a loss because I entered at the particular market price. So let me show you how they got this value. Now let me open my calculator. 1.13277, 1.13277 minus 1.13240, 1.13240. So the value here is 37. Now remember I'm using one standard lot, and one standard lot is 100,000 units. That video I sent to you, they explained it about stand. You need to rewatch it. Standard lot, mini lot, macro lot. So one standard lot means I'm staking $10 for one position, and also it means 100,000 units. 100,000 units. That's what it means. Now, when I subtract this, so I need to multiply by 100,000. Sorry, let me okay, 0.00. Let me just go ahead and multiply 0.00037. So multiply by 100,000. You can see that's giving me 37. So if I'm using one standard lot, it means that when I'm in loss of so this currently means that the reason why it is showing okay, now you can see it has gone down. It's reducing now. The only difference now is 12. Look at the difference now is it's just changing. It's always changing. The market is always changing. So I'm at $10 loss now because the difference here is 40 and 50. It's always changing. Now let me talk about macro lot. So that's 0.1 lot. This is the lowest lot size. So this is the lowest lot size, and it's what I advise anybody to use when he or she is trading, because there is low risks. Now let's assume I decide to say, okay, let me sell again at this price. Now notice something. Notice the difference. It's just in cents. The loss is in cents. Very, very little loss. Very little loss. The loss is very, 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 very small. Now notice that my loss is decreasing. Notice that 30 something now is decreasing to that's decreased to $7 now. Let me put my chart. That's because the market is already dropping in my favor. It's dropping in my direction. So once that red line at the top, once this red line at the top here goes below my entry price, then I'll be in profit. But so far it's above it, I'll be in loss. Now let's go back to this. Now notice that I'm using the lowest loss, and look at the risks. So if I have $100 account, I'm just risking 10 cents. I'm risking 10 cents in this particular trade. So it's advisable that anybody that's trading should just go with the lowest loss side and start building his account little by little. Now let me explain what this part means now. If you click on your menu, you see your account name, you see quotes, charts, trade history. That's just what you see. So let me explain this trade part. So you see you have your balance. Now your balance is the amount of money you have. For example, if you have like this demo account, I actually just opened random trades to check the spread, and if you, like, you can see it on my history. You can see the history. I just opening random trades to just see how the spread is. And you can see that currently I demo, and the loss was at $3. And $3 is not bad for a start. But imagine if I'm using one lot size, that means I'll have lost almost for something dollars. So that's the history. Now let me go back to that trade. Now your balance is actually the money you have. For example, if you deposited $200, which is let's say 70,000 naira, converted to dollars, which is $200, it will reflect on my balance. It will reflect on my balance. Now, uh, uh, equity. Equity means you have some positions running. Like now, if you look at these points where they wrote positions, it means that I have two positions running, and that's why it's affecting my equity. That's how it's affecting my balance. You understand? Now, currently, I'm in some positions and I'm at a loss of, I entered the sell. Remember, if you are selling and the market goes up, you'll be in some loss. So it's until the market reverses and drop down below your entry price, that's when you be in profit. Likewise, if I'm on a buy, so far the market is up, is above my entry price, I'll be in profit. But once the market drops down below my entry price, I'll be in loss. You understand? So now currently I entered the sell. Let me open my chart. Notice something. I entered a sell on this trade, but notice that currently the current market price, which is this red and blue line, which is the current market price, is above my entry. These two dots, dash dash lines now actually my entry price. You understand? But now the reason why I'm on a loss is that I entered a sell expecting that the market will drop, but it went up, so I will need to hold my position till it reverses. You understand? Now, that's why you can see this red line, this red digit, red value. So you have your balance, you have your equity. Now currently I'm in minus $33. That's because currently I opened one lot size for Euro USD and I'm at minus 33, while I opened a micro lot at 34. So it has deducted $33 from my initial balance. So that's why my equity is a bit lower than my balance, because equity is just like subtraction between your balance and your open positions. So currently, if I subtract $4,996 from my loss of $32, that's what will remain. But if I'm in profit, let's assume I'm in profit. Let's assume now I am on. But let's assume now I entered the trade. I'm in profit. You understand? My equity will increase. You understand? Let me try something. But it's not advisable. Let me open a buy. Let me see if I can be in profit. Let me open a buy. So let me see if I can explain what I mean. So I opened a buy position. So let me see if the market will go up. So I open a buy. Look at it. I open a buy, and I also open a sell. Now if I go back to my buy, I find out that I'm in loss on my buy. That's because I entered the buy position, but the market has gone down below my entry point. You understand? Now look at the time. Remember what I told you in the video? At every 30 minutes, a new candle will form. Now look at it. A new candle has just formed, a sell candle. Look at it. So let's see what happens if the candle can go up or below. So I'll explain what I mean. Now, going back to my explanation. So then free margin is the percentage. You understand? Free margin is the subtraction, the difference between your balance and your equity will give you a free margin. The difference between your balance and your equity will give you a free margin. The margin percentage is in percentage, what the value of your money in percentage. So there's nothing much. So for now, so whenever you want to place any trade, whether a sell or a buy trade, you just need to you go to your quotes, click on new order, but make sure be watchful, be careful about your lot size. Always make sure, always be clicking, always make sure that it's at the lowest, so that it will protect your risks. You understand? Then later I will explain. I said I'll send you videos on how to do this buy limit, sell limit, buy stop. So for now, this is just what you need to know. So look at what happened currently now. I entered a buy. This is why people lose money. They don't have any idea of trading. They just open buy and sell, and end up in loss. So now I did this one for an example. You understand? So now I entered a sell. So I'll need this red and blue line, which represent the current market position, to go below my entry price. So this is my entry price here. This dash line here for a sell. This is my sell entry price. So I'll need price to drop below it for me to be in profit, or for this buy to be in profit, I'll need the candle to go up above it. You understand? That's why if you click on trade, you can see that everything is in red. Both buy and sell is in red. So it's not really. Let's see what happens. Let's see which of them will enter profit first. Whether is the buy or the sell. So let's see what will happen. And then there's a strategy. I talked to you about the strategy I used to trade. I don't just open. The reason why I just open this buy and sell is just to explain what this candle is all about. So there's a strategy I use. But since for now, let me just give you this basic one I use. That's so that you understand. So now you need to add an indicator. You need to add an indicator. It's called an indicator. So to add an indicator, you tap anywhere on the screen. You choose this plus F, this F sign, this F icon here. You click on it. You see indicators, trend, oscillators, volume. You choose the first one, average directional moving index. You click on it. Now you see where the rose period style. Just you don't need to tap up with anything. Just change the color. I like making this my D minus red. So I'll change this D minus to red. I'll leave the D plus color. Then I'll change the first one. I'll change the first color to black. Then level. I'll tap on the pencil icon here to edit my level. I'll click on the plus sign here to add. Then I'll type 22 to add the level. So this is how this is one of the strategies I use. One of the strategies I use. So to enter a trade, let me explain what this indicator is. So the red indicator, the red one is showing you sellers, while the green one is telling you buyers. Then the black one is telling you the strength. You understand? Like if you notice something at the point where this black line crossed 22, notice that the market really dropped. The market really dropped very, very well. Notice the way the market really dropped. So now what happened here is that first, there are two things that happened. Our red line, the red indicator, and the black indicator is above 22 level. So that's telling that the sellers are in charge. Then let me give another example of when the buyers are in charge. Now see here, the red, the green and the blue, the green and the black line went above 22. That's to show that. And notice the price went up here, telling us that the buyers were in charge. But since I don't want to, I'll make another video for it. But I just want to give an example of what I use. So AJX14. Now look at normally, I didn't add this indicator before I took that trade. Normally, we're on a sell trend. I should have taken a sell, but I did the whole video, that buy and sell, to explain to you how to input your lot size. But things, don't confuse yourself about this indicator. I just added it. So later I'll make a video on how to use this indicator. You understand? So let's see what happened. So we are still on an all red. Both my buy and sell is still on red. So I'll need to wait for this red line, the red line here, to go under myself to be in profit. So you can use different time frames to check. You can use different time frames to do your trading. I remember I told you that the higher the time frame, the more profit you can make. You understand? So me personally, the time frame I use for my trading, because I'm a very patient person, is 4 hours. I don't trade every day. You understand? Because I use this indicator only for my trading. So when I use this indicator is that this level of this 22 level here, when the red or the green color crosses it, I take my trade. Like here, look at this point here. Let me give you a better illustration. You can see this rectangle here. Let me make it, let me give it another color. Now to draw arrow or rectangle or something, just tap anywhere on the screen. You click on this place here. You click on, you choose this icon where they drew circle, triangle, rectangle. You click on it. You click on the plus sign at the top here. You click on it, then you see different options. So you can do horizontal line, vertical line, trend line, rectangle, triangle. So that's what I just did. Now look at this point. At the point where let me put an arrow so you get what I mean. So at the point where the at the point where the the black line, this black line tells us strength. We have we have what they call sell trend and a buy trend. Sell trend means that sellers are in charge, that the market will sell for a long time, while buy trend means that buyers are in charge and the market will buy, or the price will increase for a long time. Sell means drop in price, buy means increase in price. So now notice something, that at this point where the red line and the black line crossed 22, the market sold. So if I was to take this trade, I'll have taken my sell at this point. This will have been where I'll have taken my sell here. This will have been where I'll have taken my sell here. Now look at the way the market dropped from that point, to this point. That's real profit. You understand? That's the strategy I use. So, but I think I want you to keep it to yourself for now. So we're just business to practice for a demo. Then let me give an example of a buy. I told you that green is for buy, red is for sell. Now look at this buy trend here. So I'll have taken this trade here when the market, I'll have taken this trade here at the point where the, at the point where, let me set my arrow. So I'll have taken this trade here on the 4 hours when the green and the black line crossed above 22. So the idea is very simple. For this ADX indicator, your green means buy and your red means sell. So whenever your green crosses 22 line and your black also crosses with it at the same time, it means that you should open a buy position. You should click on buy, because it means that the market will buy for a long time. This is a strategy I've been using only. You understand? There are different strategies, but I want you to keep this one to yourself. Don't go and be so let me just show you where I'll have entered. If that thing has crossed, I'll have taken my trade here. Somewhere around here. So I'll have taken my trade here. Yes, so if I was to take this buy position based on my strategy, I would have taken my buy here at this point. I have taken my buy at this point on this candle. And look at the way the market went up. Look at the way the market went up. So if I had taken that trade, I'll have made serious money. Even with the lowest loss side, see the way the market went up. So that's just the, like this current pair, this pair, I expect it to drop. I expect it to drop down for a very, very long time. I expect it to even drop to somewhere like here. It might even drop to somewhere like here. I expect it to sell for some time. So that's just the method I use. So once it's above 22, that's something like this, I will avoid taking any trade. I will stay away from the market. I will just need it to go under 22 and go up. Just like this sell here. I'll need this black line to go under. This black line is telling us trend strength. So I need the black line to go under 22 and cross and just see it's going up again. Then any color that goes up with it and crosses 22 with it, I'll take it. Then look at this sell here, same thing. Look at this buy here. So don't just go through it and let's see how our trade is going. We are still on the red because that red line is yet to cross our sell entry. So just go through the video and let me know what you think. So there's nothing difficult in trading, sha. So if you want to place any order, let's say for gold, maybe you want to buy gold, you press new order. Maybe you want to buy gold at the current market price. Let me look at gold chart and check what out. Let me see if it's ready. Let me just check. So currently you can see gold is not ready yet because this black line is above 2022. So I can't take the trade. I'll just leave it. It's not every day you have to trade, just waiting for a right setup. So this will have been a buy. See this buy that happened here. Imagine someone took this buy, big profit. So this one is not ready because it's about 22 already. I can't take it, so I'll need to wait. So what I'll need to do is from time to time I'll keep checking. Like now, look at this current pair, the Australian US dollar. So it's not yet ready yet. I'll need to wait for the black line. I need to wait for this black line to go under and then go up before I take my buy or my sell, depending on the color. So British pounds, US dollar. This one is not ready yet because the black line is already above 22. Though this like me, I'll have taken it straight here the moment it crossed. So it's not really difficult. It's not like this sell here. This was a very good sell. And look at the way the market dropped from here to here. Look at the difference. The way the market dropped from here to here. So just just let me know what you think. When the market is a bit slow. Then the next video I'll talk to you about fundamentals, how to use it. So there's this site, forexfactory.com. So there you can follow the latest news to know if a pair has news or not. So like when you open the site, you see different days where there are news. Like for today, as at 1 a.m. there'll be news for Japanese yen, Australian dollar, Swiss franc, euro. You understand? So once the you notice these colors here, all these yellow colors, red color, yellow and red color, brown color. That's these small boxes here. All these small boxes I'm clicking on. So the thing is, once it's yellow, it means that the news might not really have any effect. You understand that it's safe to take a trade based on your analysis. It means that it's safe to take a trade. But once it's red, like this one now, like this CNY, is not advisable to take this trade now because this pair can affect the currency. You understand? So just let me know what you think. It's not really difficult. So I'll still make one video so that I'll explain how to place your trades. Now look at what is happening now. You can see that the entry price here has gone. Just if I open my trade now, you see I'm in profit. Can you see I'm in profit now? It has changed to blue. When the color changes to blue, it means you're in profit. And if you look at your equity, you find that the equity is increasing. That's when I'm in profit. You understand? Look at it. Notice I'm in blue. That's because I entered a sell. And price has dropped below my sell entry. The reason why this buy is in loss is because I entered a buy and price has gone below my entry price. Look at it. Can you see it? So I'm in profit now for a sell because I took this sell because of I checked my analysis and it was a sell and I took this. As it's dropping, my profit is increasing. What if I say, okay, I'm not doing again, let me close my position? You go to your trade, you hold, you long hold it, you just hold a particular position for like 2 seconds. Then something will pop up, close order, close by new order. You can close at current market price. Look at it, close it profit. Order is closed. Now if I go back to my history, you will see it. The order I just closed 0.14. You can see it. So the buy is in profit because price is dropping. Sorry, the sell is in profit because price is dropping, and the buy is in loss because the price is dropping. So that's just the video. There's nothing much. I'll still make more videos on the strategies. But for now, just go through it and let me know what you think.